I'm Ken. This is Jason. 2020 was quite the year. Glad to put that one behind us. As we look to 2021, there'll be new challenges, new opportunities, and new way of doing things. We'd like to share with you our outlook for 2021 based on research from LPL Financial.
Significant progress has already been made with regard to COVID-19 treatments and vaccines. We believe we will continue to see advances in 2021 that will further limit the impact of the virus by the end of the year and help to improve economic activity. But it will be a process.
The outcome of the 2020 elections will certainly have an impact on various policies, specifically ones related to COVID-19, taxes, trade relations, and government spending programs. We expect a continued split Congress, which may limit broad-reaching policy changes, but historically the stock market tends to perform best under this scenario.
We believe that we are now in the early stages of a new economic cycle. Economic expansion since World War II have lasted more than 5 years on average, with the past 4 expansions averaging more than 8 years. The new expansion may be only a few months old, and with record amounts of monetary and fiscal stimulus firmly in place and viable vaccines already available, we anticipate many more years of growth.
We believe that a swoosh-shaped recovery is still the likely scenario. The quick, sharp decline we saw in March, then a partial snapback which occurred in late summer of 2020, followed by a more gradual recovery likely to take at least a year. Total consumer spending has recovered significantly, and business optimism has improved, with more expected increases still yet to come.
Despite such a difficult year, 2020 was a good year for stocks. The market is forward-looking and has looked forward to better times. After such a strong comeback, does this mean returns going forward will be muted? Not necessarily. On average, stocks have historically gained about 65% during the first 2 years of a new bull market, after an average 41% gain during year 1. Even with the S&P 500 roughly 60% above its March 23, 2020 lows, we see further potential upside in 2021.
As the threat of COVID-19 diminishes and the economy moves towards fully reopening, we could potentially see S&P 500 earnings growth of 25% in 2021. We expect this pickup in earnings to allow stocks to grow into their current valuations. We also expect interest rates to remain low and inflation to be muted at least through the rest of this year.
As we look ahead, we believe we will see a smoother path and an economic environment that will feel better. We hope economic conditions continue to improve, and we remind you that it is thoughtful planning and sound financial advice that keeps us on the journey.
We wish you well in this new year and look forward to working with you and potentially even seeing you. Wouldn't that be nice?
All our best to you and your loved ones.